So, listen, I think it's going to be a very exciting session. In my opinion, I think we have about two of the greats in the equity space and in the debt space who are going to be with us today. So we're going to be talking about diversifying the economy, attracting FDI in the hospitality sector. What are the different strategies, pitfalls, opportunities, challenges? This is obviously as part of the Vision 2030, but just as a heads up for everyone, I'm going to add a little letter in that FDI acronym. I'll call it FIDI, F-I-D-I. So we're not just going to talk about direct capital, but we're also going to try to discuss indirect capital as well. So trademark that under FIDI.
Okay, good. And you've got plenty of seats up here. If you want Desi up here, we'll bring Desi back on stage.
Yeah, no, listen, I'm not spooked at all. That's definitely not going to be as entertaining as her. So it's stiff competition. I'll stick to the real people that I
know you guys are doing a lot on the whole metaverse and things like that.
That's true, correct. Thank you so much. So good morning, everyone. Assalamu alaikum and sabah al khair. So following up just on the topic of the session today, please allow me to introduce our panelists. So coming all the way from Kansas City / London, winners of the Super Bowl. You're not a Swiftie, are you, Coley? Mr. Coley Brenan. He's the head of the European operations for KSL Capital Partners, and effectively one of the largest private equity firms in the world. They do tons in the hospitality space across the world, either on the OpCo side, PropCo side, credit, funds, private equity. So listen, I'll try to get as much out of you. There's plenty in confidence, so don't worry about that. And the second gentleman doesn't need introduction. I'm happy to introduce you to Mr. Hossam Al-Basrawi. He's the general manager for the corporate banking group for Alrajhi Bank. Mr. Hossam, good morning. Please. I think you know a thing or two about debt, so please. All right, you know what, I'll just keep it casual. Still a friendly conversation at the end of the day. You're allowed 5 to 10 seconds in your responses, if not more. But so, Coley, I'll start with you.
Sure.
You've seen the quantum of the projects outside. You've seen the amount of pipeline in the hotel world. You've seen a lot of these, incubation companies, the whole elements in the supply chain of hospitality. How do we get from where we are today to satisfying the 2030 vision? And how do we really get the type of capital that will, I want to say, be a disruptor to the local capital in our space?
Yeah, first of all, good morning to everybody. It's a real honor to be here with you all, specifically covering this topic. And this is where our firm, the foundation of our business, being institutional investors in all things travel, leisure, hospitality, and tourism, for 30 years now. We've seen a lot of opportunities come. We've seen a lot of evolution of consumer behaviors in different markets. And what's happening in Saudi Arabia or the broader region is really just a more accelerated version of what we've seen elsewhere. And so as we thinking about our capital, deploying our capital, making strategic investments around the world, and specifically to your question on where we are relative to 2030, you're on a journey, and kind of where we are in that journey in terms of the relevance to global institutional capital. It feels like a very positive development in terms of how far the region and the market has come to at this point. So specifically to your question of kind of how we see capital opportunities here, we're on a path, and as we see some of these developments coming out of the ground, as we see the behaviors and the demand elements evolve, it will become more relevant to a more diverse set of institutional investors around the world, and the capital flow, I think, will become fairly organic.
Okay, so if we have to narrow down, say, your top 3, top 4 criteria, so once you penetrate a new market, what are some of the key elements you're going to be looking at effectively? So besides the positivism around, the trading fundamentals, operating fundamentals, it's all great, but then what are some of the maybe macro elements that you're going to be looking at? Because the idea here is not to talk on a maybe hotel by hotel basis, but if we want to shift that overdrive, basically.
Yeah. So if you take a couple of things that are for granted, which are a unique relevance for commercial and cultural and tourism travel, an outstanding set of large-scale and well-curated and well-built assets, right? So the kind of some of the real estate fundamentals will be there. You have an evolution in capital markets. The element that needs to change to really drive FDI is liquidity. And if you think about foreign direct investment in the context of those who are making conscious decisions to make long-term capital investments in a region, that capital typically follows different patterns.
Correct.
You don't see much in the way of pioneering in terms of institutional capital. And what you need to do is you need to see investments made and then closed. So return of capital will create liquidity, and that starts the spin cycle of a kind of a longer term, to your point, more macro, from a decade to decade. That's how you'll see an unlock on liquidity.
Fair enough. So on the liquidity side, in layman's term, you want to see a lot more, let's say, transactions or M&A side, M&A activities happening, people exiting, they're vocal about their success stories, and then ultimately that will start attracting more and more capital, like you said, and then...
In short, that's right.
Okay, fair enough. The issue is we're not seeing a lot of that at the moment. So there's a lot of development pipeline, but on the M&A side, that is yet to be seen, or at least there has been transactions, but I don't think to the level that that international investors or institutional investors, as you play, would want to see it in that respect. So that's one of the elements that for you guys, or not KSL, but effective for a lot of institutional investors would be key.
Speaking as a member of a larger institutional investing community, that's right. I think if you pull back a little bit and look how that set of somewhat generic traits exist elsewhere in the world, what's unique about this part of the world is just the level of focus and attention.
Correct.
And the power of what that 2030 vision is doing to set an achievable but stretch goal that has really put a lot of people in the hospitality space, in the banking and finance and capital market space, and in the institutional investing space on notice that this is an inevitability. And so it's become really important for those in our space to be paying attention to this part of the world to try to understand when is the right time for that direct investment. But in the meantime, we're trying to find ways of thinking about our platform companies, our operating teams, how they can uncover opportunity. And so some of that investment of time may not kind of make the chart for kind of the evolution of foreign direct investment, but the level of focus is quite significant, and the level of opportunities that our portfolio companies or folks in the broader hospitality ecosystem are making, that part we think is truly significant and differentiating, and this is why I've kind of maintained my view, confidently saying that institutional investment and kind of that liquidity will come.
I really think that's really one of the key pillars, and I always like to bring that example. So we have, just before COVID and outside COVID, we've seen a lot of that institutional PE capital going into markets like the Indian Ocean, for example, in a direct basis, direct ownership, and you even see some of the lending happening from European banks, Asian banks, not just local banks. But I think one of the key lessons there, what we've seen, is that there's just been so many deal volume happening effectively just the decade before, and that effectively created that resilience and that know-how for any foreign investor to just understand policies, foreign ownership rules, sort of return hurdles, and all of that. So listen, I think that's very interesting, and that's really one of the points. We're probably just going to come to that in a little bit, but on the debt side, now, Mr. Hossam, so you're arguably one of the largest banks in the region, and you work with so many, sponsors and borrowers in the region. What are the challenges, or what the shift will be once you start getting some of that international capital coming to invest in Saudi Arabia? So it may not be easy for them to directly own commercial real estate, right, in some of the key markets. How are you going to basically just, hover around that?
Well, first of all, I just want to Thank you for having me. It's really exciting to participate in such event. I mean, watching such event in Saudi in itself. I've been a banker for many years, and participating in such activity that's relatively new in the market, really exciting. It just brings energy across the board for everyone. Now, on the lending side, I think what's really important is for any lender, banks or financial institutions, is the ability to assess the risk. And the first part of assessing risk is understanding the demand. I mean, the potential is there, and everyone wants to, and the growth potential is there. Everyone wants to participate in this growth potential, but what really matters is the ability to assess the risk. And what the vision has outlaid, the 2030 vision, it kind of gave a very clear view on every destination, every location, every project, every industry, every sector. What are the plans for the government? So there's clarity around that, and with that, your ability to assess risk is a lot better than before. So that's number one. I think that's very important because the diversity of hospitality in Saudi goes from religious tourism to entertainment, to main cities, to businesses, you know. So everything, all the offerings are very diverse within Saudi, and there are opportunities across the board, and which each and every destination that is around that, there is clarity around where the government expects the traffic to be, either for local tourism or international tourism, whatever it is, right? So with that, I think on the lending side, we'll be a lot more comfortable to be able to assess the risk. Now, add to that all the enablers that has been happening with the government through the TDF, for example, the Ministry of Culture, for example, right? All of these and their participation and their understanding and their ongoing engagement with the banks and with the investors kind of really gives comfort for the banks to be able to assess the risk. Now, the real challenge is there isn't much of a track record.
Sorry?
There isn't much of a track record from before of what the behavior, what the expectations are.
Correct.
And that I think will evolve and grow as we go, as we see more and more projects. So I think the final appetite or how this whole lending market is gonna be shaped will take some time, right? Until everyone gets into kind of go through the learning curve of how this is gonna evolve. But I think the availability of the information and the enablement and the support from the government, right, will give the banks the appetite to participate. Now, the appetite will vary depending on which project, at what level, what kind of debt to equity structure is there, who's the operator, what are the expectations of the international investor. All of this will play into the risk assessment and based on which it will drive what kind of appetite and support we'll get from the local banks.
Thank you, Mr. Hossam. So it's very interesting. So I think from both your answers, one of the key element here, or one of, you just mentioned time, basically, both of you, until effectively the markets do reach a certain level of maturity, let's say. But again, if we kind of want to expedite that FDI or FIDI, and I want to touch base on that a little bit faster, what are the sort of things on either the debt side or the equity side that some of these investors could do to kind of give themselves maybe some form of a downside protection, maybe come in a form of a partnership with a local, investor, instead of just, having the traditional approach, just coming and acquiring a land and developing a hotel in that sense, or acquiring a hotel, basically. Maybe, Coley, I'll start with you on the equity side.
Yeah, I think you provided a good menu of options there. I don't think the wave of capital is going to come in the way of vanilla structures with traditional approaches to those investments. I do think you have any number of options where you can think about foreign capital working with local partners, sharing the economics and kind of trying to find alignment. As investors, we're always looking for an alignment of incentives. And so, thinking
Fair
about
enough.
how do you get an operating team and kind of a local developer or local real estate partner aligned with you. There's any number of ways of structuring fairly creative, but also traditional, i.e. kind of not creating new types of structures or concepts here. That's one. And then the other is, I alluded to it in one of my remarks earlier, thinking about ways of investing not just through vanilla capital, but by encouraging companies that you have investments in that are global by participating in the region.
To bring them in here effectively,
yeah,
right?
and that is kind of our other way of thinking about if it's not going to be just a simple equity investment into an asset or a portfolio or a large company here, but finding other ways of working with local or regional capital or bringing our operating teams and operating partners and having them lead and de-risk.
Right.
We've done that in Mexico and the Caribbean. We've done that in the Maldives and in the Indian Ocean. We've done that in certain parts of Australia. So as a North American and European-based investor, we have good precedent on doing that. And this is my point of there are a number of situations around the world that set good patterns that I think kind of drive my confidence.
Correct. I mean, one of the examples I can think of, and I think, so that was in the public domain, so we've seen what Apollo had done and then with the Abu Dhabi government, I think about a year ago or a year-ish ago, I think they've been very vocal about it. And instead of Apollo coming, in that traditional approach, they said, listen, we're just going to partner with arguably the best developer in the country. And basically they manage, they manage their own investment vehicles, but we're just going to support with that capital. And then the success story works. We just pour more again. Okay. And on the OpCo side, so besides maybe the hospitality or the direct real estate, so you mentioned some platforms. Any idea you have in mind or any examples that you can come up with that could potentially be applied here within the supply chain of your traditional hotel development side? Because I think this is something you guys will probably be quantifying as well when you're looking at the risk, right?
One of the things that I think it's not really looked at in the hospitality sector is the full supply chain. I mean, the whole staff that work in hospitality, the training centers that could be also an opportunity for foreign investors to come and build these, and everything that has to relate with the whole hospitality, the F&B, the staff, and everything that goes around it is an opportunity for foreign investment. And again, the risk is mitigated because the demand is there.
Correct.
And that is very important. And I think one of the things that should be looked at also and thought about for the acceleration is that there are already some foreign investors who own hotels inside, especially in the holy cities.
Correct.
Right.
Absolutely.
And they have a flavor of how the market works. They have an experience of how the market works. They have a flavor of what are the challenges. So I think they're also well positioned, right, to have a head start before anyone who's new to the market. I think that's very important. Number two, I mean, most of the operators are already operating in Saudi.
Correct.
Right, and they also have a flavor of how the Saudi market operates.
Fully agree.
And they can give reference to some investors to see where things make sense for them to also to mitigate their risk, because that's also key, right? So for me, you said acceleration. I think it will go into phases. And I think the ones that will feel more comfortable going forward with partnering with local players are the ones who already have a flavor of the Saudi market and the ones who are close to some operators in the Saudi market, right? I think these are things that should be looked at.
100%. And I think, listen, you make a very good example and a very good case here, because in the holy cities, the beauty about it is that you can effectively anticipate with very little standard deviation the form of demand. When is that going to come? How's that going to be translated to? And then again, it's all about so much historic patterns, and data that has been made available out there for more and more international. And they don't own lands. I mean, I understand obviously freehold ownership policies in Mecca, Medina are different than in some other parts of Saudi Arabia. And in retrospect, you still have some international owners, very well present, very well present out there. So, Coley, still on the supply chain side. I'm not letting you go on this.
Yeah.
Besides so I'll give you an example. So I think what the past 3 years have done, we've seen a phenomenal success story around the branding side. So the branding, third-party encumbrance for a lot of these hotel projects has been great. The appetite has been great. The level of response that we're seeing is phenomenal, either across, your big players, your niche players. You even have a lot of individual, let's say, hotel owner operators that kind of want to, export their own services and their brand to Saudi Arabia. But that is not followed by liquidity. That is followed by interest, appetite. But then on the liquidity side, so besides the branding, coming back to some of the supply chain elements that we talked about, what sort of things you think institutional investors can potentially come and support with? So we talked about staffing, we talked earlier, some of my colleagues talked about tech side, we talked about branding. Where do you think maybe the low-hanging fruit can be in the shorter term, let's say?
Yeah, well, I guess tie that to your comment about the holy cities is the right one, because you can look across cycles and you can see counter-cyclical demand. And so that suggests that there is absolutely the dynamic for institutional capital to own real estate in those markets. The new tourism markets in Saudi Arabia, I think, are developing and they will get there. But you need to understand that data. So in the interim, what can you do? You can position yourself so that you are not just absorbing and digesting the data that you get from the aggregators.
Correct.
The kind of supply and demand services, which are fabulous, but you really need to understand what's happening with the consumer behavior, what's happening with the employee bases, how can you manage margin effectively. And that comes through operating expertise, that comes through not just the brands, but what the brands bring are tried and true and kind of tested demand generators and distribution channels.
Correct.
And understanding how the global distribution channels can impact and benefit, and also add stability and predictability to the demand, and create data that then the institutional investment community relies on. So again, it all feeds on itself, and it's all kind of evolving in a very positive and productive manner. From KSL's perspective, we've got 25 portfolio companies around the world, all only operating in travel, leisure, tourism, and hospitality. And so we look to those platforms as being the lead for us into a region like this. That's how we got into Mexico and the Caribbean. That is how we went from 1 investment to 3 investments in the Maldives and the Indian Ocean. And I suspect that any investment in the Middle East will follow a similar path.
Fair enough. And I think from an investor dynamic standpoint, I think one of the things we're still seeing is that most of the investments coming into our space are very much on the long-term side. A lot of the top PEs out there, they would have a bit of a shorter / medium-term approach, a 5 to 6 year form of exit. I don't know how it's happening on the non-real estate side, if it's still the same, if it's obviously the same approach, but how do you think there could be an alignment at some point in time if you start getting some of these larger PEs into a market like this one?
Yeah, and so private equity or broader institutional investors need to understand liquidity, and so this is my point on there's any number of structures that can be introduced to the situation to ensure that liquidity. You can come in and create a put, so that the local partner buys back your stake, assuming
after
you're
4 or 5 years.
right?
Yep.
And so that will then kind of start that wheel, which is what needs to happen and what will happen. So yeah, I think the menu of options is significant. You need a couple of other broader dynamics to evolve before that menu is all fully relevant. But I think that institutional investors around the world are quite good at uncovering opportunity and creating structures that really drive alignment.
Fantastic. Thank you, Coley. I'm just being mindful of our time. So, Mr. Hossam, final question to you. Do you think the lending market and your peers today, so you mentioned TDF, and I do want to say that TDF adds a lot into that,
it's an enabler, yes.
Absolutely,
It's an enabler,
definitely.
Yeah, it gives comfort.
Do you think the lending market today is ready for some of the institutional private capital coming into Saudi today?
I think
in
it's
this
more
space?
ready than ever. It's more ready than ever, I think.
All right.
That's all I can say.
Fantastic.
Yeah.
Okay, well, you heard it here, folks. Thank you so much for your time. Thank you so much.
Thank you.
For being here.
Thank you.
Great to have you.
Very
Welcome to Saudi
exciting.
Arabia.
Thank you.
If you guys have any questions, we're going to be roaming around the halls today. So,
Okay.
thank you.
Thank you.